Hello friends, we will continue our discussion on the chapter of admission of a partner. Right? So in this chapter we were studying about that a new partner joins the partnership firm, right? And when he joins the partnership firm, he will get the share in profits. He will get share in profits, right? And so we discussed about the new profit sharing ratio, we discussed about the sacrificing ratio, and we were discussing about the goodwill. We discussed why it is important to study the goodwill in this chapter, because the new partner is getting the share in the profits. New partner, when joins the firm, he will enjoy the goodwill that has been established, that has been earned by the old partners over a period of time. New partner will straight away enjoy that reputation in the market. For that reputation, he will pay goodwill to old partners, right? How much goodwill he will pay? He will pay only that part of the total goodwill to the extent he is getting the share in profits, right? That means what will be the amount of goodwill that will be brought in by the new partner? That will be total goodwill multiplied by new partner's share in profits, right? Then we discussed the various ways in which the goodwill can be brought in by the new partner. Case 1 was goodwill paid privately, right? So if the goodwill is paid privately, I told you privately means under the table. We'll say no record in books, will not record anything in the accounts. If the goodwill is brought in by the new partner privately, we will not record anything in the books, right? The second case was the goodwill brought in cash and retained in business. The second case is the goodwill is brought in by the new partner in cash and that goodwill is retained in the business, right? So if we discuss the journal entries that if the goodwill is brought in cash, we'll say cash account debit to premium for goodwill account, right? So we will credit the goodwill, we'll name it as premium for goodwill account, right? And we will debit the cash. Now I discussed one more point, that as per accounting standard 26 AS 26, it says that the goodwill is not to be brought in the books of accounts. It is to be adjusted through the partners' capital accounts. So if we have to adjust this premium for goodwill through the partners' capital accounts, what we will do? We will distribute this goodwill brought in by the new partner to the old partners. We'll say premium for goodwill account debit to old partners capital accounts. Old partners capital accounts will be credited because they are receiving the goodwill that has been brought in by the new partner. Now the question is, in which ratio this premium for goodwill be distributed? This premium for goodwill will be distributed in sacrificing ratio of the old partners. That is, in the ratio in which old partners sacrifice their share of profit in favor of new partner. Clear? The question is, what is the sacrificing ratio? We have discussed this in detail in the previous chapters. What is the sacrificing ratio? Old share of a partner minus new share. This is sacrificing ratio. Clear? So this is all we have discussed so far, that in case the premium for goodwill is brought in by the new partner in cash and that is retained in the business, the journal entries will be cash to premium for goodwill account, and then this premium for goodwill will be adjusted through the partners' capital accounts. For that, the old partners' capital accounts will be credited, because this goodwill is for the old partners for their sacrifice of share of profits. This premium will be distributed in sacrificing ratio. What is the sacrificing ratio? Old share minus the new share. Clear, friends? Now let us discuss some practical problems on this case. Let's see the problem number 1. It says A and B are partners in a firm sharing profits in the ratio of 3:2. Okay. A and B surrender half of their respective shares in favor of C. Right? C is to bring his share of premium for goodwill in cash. The question clearly says that premium of goodwill will be brought in cash. The goodwill of the firm is estimated at 40,000. Pass the necessary journal entries for recording goodwill. Let's first of all write down the facts. We have two partners, A and B. They are sharing profits in the ratio of 3:2. The new partner is C. Right? His share is half of A's share plus half of B's share. This is C's share. Right? What is the total goodwill of firm? It is rupees 40,000. Right? Now the question says A sacrifices half of his share in favor of C. So we can say, what is A's sacrifice? What is his original share? 3/5. How much he is sacrificing? Half of it. So he is sacrificing 3/10. Similarly, what is B's sacrifice? His original share is 2/5. How much he is sacrificing? Half. He is sacrificing 2/10. Now, what is C's share? 3/10 plus 2/10. Right? This plus this comes to 5/10, or I can see 1/2. Now C is the new partner. He has to pay the goodwill to the old partners, that is A and B. Clear? What is the amount of goodwill that is payable by C to A and B? We'll say amount of goodwill payable by C. What is the total goodwill of the firm? 40,000. What is this share of C in the profits? Half. So how much goodwill he will bring? Only to the extent he is getting the share in the profits, right? So out of 40,000 he is getting half share, so he will bring 20,000 as goodwill. Now if you have to pass the journal entry, what will be the journal entry? First of all, he is bringing goodwill in cash. I'll say cash account debit. And what is the name given to goodwill? Premium for goodwill account. How much? 20,000. Right? Now this premium of goodwill, this goodwill that has been brought in by the new partner, we have to distribute this goodwill to old partners. So I will say premium for goodwill account debit. Who are the old partners? A and B. To A's capital account, to B's capital account. What is the total amount of premium? 20,000. Now it is to be distributed between A and B. In which ratio it will be distributed? I told you that this amount of premium will be distributed in the sacrificing ratio. What is the sacrificing ratio? What is A's sacrifice? 3 by 10. What is A's sacrifice? 3 by 10. What is B's sacrifice? 2 by 10. So what is the sacrificing ratio? 3:2. This is sacrificing ratio, right? So in which ratio this premium will be distributed? This will be distributed in sacrificing ratio, that is 3:2. This is the ratio. This comes to 12,000 and 8,000, right? In the narration you will give being premium distributed among old partners in sacrificing ratio. What is the sacrificing ratio? That is 3:2. You should show to the examiner that you should know the logic behind this. You should know why this figure comes to 12,000 and why this figure comes to 8,000. Clear? So this is solution to this problem, that the goodwill is brought in by the new partner in cash and that is retained in the business, and that will be adjusted through the old partner's capital accounts. Clear? We have the goodwill of the firm. We will calculate the amount of goodwill that is payable by the new partner according to his share in the profits that he is acquiring from the old partners. Clear? So this is the solution. After this, let's see the next problem. Let's see the next problem. The next problem is A and B are partners in a firm sharing the profits in the ratio of 2:1. On 1st of April 2016, their capitals are 4 lakh and 2 lakh respectively. Right? On that date, they admitted C as a new partner for 1/5 share in future profits. The new profit sharing ratio of A, B and C will be 3:1:1. C brought in 1 lakh as his capital and 21,000 as his share of premium. You will say this everything is given. We are given the share of premium. We are given he is bringing the capital. We are given he is bringing in cash, and it is to be retained in the business. Then it is very simple to pass the journal entries. Okay, let's see. First of all, we will write down the facts. There are two partners, A and B, sharing profits in the ratio of 2:1. Now there will be three partners, A, B and C. The ratio will be 3:1:1. C is admitted for 1/5 share. Right? Capital to be brought in by C is 1 lakh, and goodwill to be brought in by C is 21,000. Everything is given. Right? So, if we have to pass the journal entry, what will be the journal entry? First of all, cash account debit to capital account. He is bringing in capital. Right? How much is the capital? 1 lakh. And how much is the premium for goodwill? 21,000. To premium for goodwill account, that is 21,000. So what is the total cash brought in? 1,21,000. Now this premium for goodwill is to be distributed among the old partners. Who are the old partners? A and B. What is the journal entry? Premium for goodwill account debit. What is the amount of premium? 21,000 to A's capital account to B's capital account. Now, in which ratio this premium for goodwill be distributed? In the sacrificing ratio. We don't have the sacrificing ratio, so let's calculate the sacrificing ratio. We'll say working note, calculation of sacrificing ratio. If I talk of A's sacrifice, I will say old share minus new share. What is the old share of A? 2/3. What is the new share of A? 3/5. So this comes to 1/15. Now we'll talk of B sacrifice. Old share is 1/3, new share is 1/5. This comes to 2/15. So what is the sacrificing ratio? Now you know the sacrificing ratio is 1:2. That means A is sacrificing less, B is sacrificing more part of his share of profit. Now this premium for goodwill of 21,000 will be distributed in the sacrificing ratio of 1:2. This comes to 7,000 and 14,000. 1:2. Clear? So we are given the old ratio and we are given the new ratio. We calculated the sacrificing ratio and we distributed the premium for goodwill among the old partners in the sacrificing ratio. Clear? So this is simple, right? Now let's see another practical problem. The third problem is Ram and Shyam are partners sharing profits and losses in the ratio of 4:1. They agreed to admit Mohan into the partnership on 1st April 2016 for 1/3 share in profits. It was agreed that Ram, Shyam and Mohan would share the profits equally in future. That is 1:1:1. Mohan brought in 50,000 as goodwill premium for his 1/3 share in profits. Record the necessary journal entries in the books of the firm. You will say that it is a very simple question. Everything is given, right? And by now, after doing the two questions, you know we will first calculate the sacrificing ratio, right? Let's see. So there are two friends, Ram and Shyam. They are sharing profits in the ratio of 4:1. Now Mohan is admitted for 1/3 share. What is the new profit sharing ratio? This is 1:1:1. That is equally. First of all, we'll say calculation of sacrificing ratio, right? If I talk of Ram, old share minus new share, right? This is sacrificing ratio. For Ram, what is the old share? Old share is 4/5. What is the new share? 1/3, right? So this comes to 7/15. Now let's see about Shyam. Shyam's old share is 1/5. What is the new share? 1/3. So this comes to -2/15. This means that the old partner Shyam is also gaining in the process. He is not sacrificing, he is gaining in the process. He is the gaining partner. His old share was less, his new share is more. His new share is more than the old share. That means he is also the gaining partner. If he is a gaining partner, he must pay goodwill to the sacrificing partner. Make a note here. Make an important note here that every gaining partner, including the old partner, must compensate the old sacrificing partners, right? That means in the process of admission, if the old partner is also gaining, he must compensate the old partner who is sacrificing. Now here another question is, what will be the amount of compensation payable by this gaining partner to the sacrificing partner? The question again is, the answer again is the same. If I talk of amount of compensation by Shyam to Ram, it is the total goodwill of the firm into share gained. What is the total goodwill and what is the share gain? Share gained is 2 by 15, but we don't have the total goodwill in this question. See, it is given that Mohan brought in 50,000 as goodwill for his 1/3 share in the profits. Right? They tell you, now I am assume total goodwill is equal to X. Now Mohan has acquired 1/3 share in the profits. X into 1 by 3 is the share of Mohan. Mohan is the new partner. The new partner will pay the amount of goodwill equal to the share gained in the profits. Total goodwill is X and his share is 1 by 3. Now this amount is given as 50,000. We are given, read the question, Mohan brought in 50,000 as goodwill for his 1/3 share in profits. For the 1/3 share, the goodwill is 50,000. So we can easily calculate what is the total goodwill of the firm from the Mohan's share. Total goodwill is 1,50,000. So now we can calculate amount of compensation by Shyam, who is the gaining partner. What is the total goodwill? 1,50,000. What is the share gain? 2 by 15. Right? What is the total goodwill? 1,50,000. And how much is the share gain? So this comes to rupees 20,000. Now we move on to the journal entries. What will be the journal entry? First of all, journal entry will be bank account debit to premium for goodwill account. What is the amount? 50,000. This is by the new partner only. Okay, the premium for goodwill will be brought in by the new partner only, not the old gaining partner. Now this premium on goodwill will be transferred to the sacrificing partners capital accounts. Goodwill account debit. Who is the sacrificing partner? See, the sacrificing partner is only Ram. Not all the old partners are sacrificing to Ram's capital account. Premium for goodwill is 50,000. And we know that the gaining partner, that is the Shyam, also has to compensate the old partner, the sacrificing partner Ram, by rupees 20,000. So we will debit the account of Shyam. We'll say Shyam's capital account debit 20,000. This 20,000 is for compensation for gaining the share in profits, right, after the admission of a new partner. So with how much is the total? 70,000 is credited to the sacrificing partner's capital account, that is Ram's capital account, right? So this is one very important point here, that in case of admission of a partner, at the time of admission, if the old partner gains, he must also compensate the old partner who is sacrificing. In that process, the gaining partner's capital account will be debited and the sacrificing partner's account will be credited with the premium for goodwill plus the compensation payable by the gaining old partner, right? So this is all we have for the today's lecture. In the next lecture, we'll do some more practical problems on this topic. Then we will move on to the next case of goodwill. Thank you, friends.